Good morning. I'm Diene Gerdes and I'm with the Mortgage Advantage. It's February 8th, 2011. Today I'm going to be talking about the exciting Truth in Lending Statement or Regulation Z. The Truth in Lending Statement was developed in 1968 by the feds. It is a federal law designed to protect consumers and credit transactions by requiring clear disclosures of key terms of the lending arrangements and all cost. It was actually implemented for auto purchases and later modified for home mortgages and credit cards. Now, before you cross your eyes, I'm going to do my best to try to explain this because you've obviously been to closing or had the statement and didn't have a clue to what it meant. I know I've been to auto dealers and they just say sign here, sign here, sign here, and I sign instead of asking. Shame on me. Clear disclosure is the following. Is it assumable? Does it have a prepayment penalty? How much interest is paid over the life of the loan? And the clearest of all is the APR, or the annual percentage rate. Now, that is if you consider clear and mud to be in the same sentence. The APR expresses the mortgage rate as an annual rate rather than just a monthly rate. Think of it as your note rate. Let's say your note rate was 5%. And then you start adding on stuff to it. You start piling on stuff like mortgage insurance. If you have an FHA loan, you've got monthly mortgage insurance and upfront mortgage insurance if it's a 30-year loan. And that is going to be added to that note rate. If you have a VA or a USDA loan, you've got a funding fee. That's going to be added on to that. If you have closing costs, well, you'll have closing costs, but the closing costs, there are lender's fees, origination fee, doc prep, processing if there is one, discount points if there is one, administration fees, title fees, the escrow fee, email fee, all, and just it goes on. These fees are added to that note rate. So let's say you had an FHA loan that was at 5%, your note rate could be somewhere, I'm sorry, I misspoke. Your APR, or annual percentage rate, would be somewhere in the 5.75 range. And your lender isn't trying to stick it to you. The APR is probably one of the hardest to understand because it is not your note rate. There have been a couple of changes with the TIL over the past few years. And the first major change was in July 31st, 2009. What happened at that time is that we have to have due disclosures immediately after application and before an appraisal can be ordered. And that disclosure needs to have all the fees, like we talked, like the piling it on to the note rate so that the APR is disclosed. If the APR is disclosed incorrectly and the loan gets to docs, then that can be very painful because the loan everything would have to be redisclosed to your client. Some lenders may feel like they're being tasered by the Fed police because that disclosure can only be off by 0.125. And the other piece of it is, even if you as a lender are paying all the closing costs or the seller is paying all the closing costs, they don't care in the APR. They're still going to disclose all the cost as if the buyer was paying them. And the truth in lending, as with any disclosure, for it to be effective, it needs to be explained and the buyer needs to read it. Have a great day. Mortgage Advantage, Diene Gerdes.